So in part one of this session, we looked at the process for setting a budget. But what about it being a realistic budget? To ensure it's a realistic budget, you need to be aware of a number of things and you need to gather the relevant information. Yes, there will be different types of budgets depending on the nature of the organisation, as well as its aims, its objectives, its budgetary policies and its procedures. They're all going to be part of financial governance. And then depending on each type of budget, you'll need the pertinent, relevant information, you'll need relevant data, and then depending on whether it's a departmental annual budget or a new project budget, things may differ. Some information will be internal, some will be external, and you'll need to start gathering that information. There'll be some common ones and we'll discuss them in a minute, and there'll be some simple questions that you can start the process off with. And those will be, what are your projected sales and output, or what is the output for that budgetary period? You need to be realistic. If you overestimate, it will cause problems in the future. What are the direct costs of that sales or output? I.e., what are the costs of the materials, the components, subcontractors if they're being used to make that product or supply the service? And then what are the fixed costs and overheads? What have you got that, the building, the heating, all those, the machinery costs, the things that you already have and that will be there whether you're doing this project or not. Your organisation may have different types of expenses depending on whether it's private sector, public sector, whether it's a manufacturing or providing a service, but you can still divide those up by department, team, by project, and don't forget to include allowances for things like tax, etc. So we might get that information from things such as the organisation's business plan, from the sales forecasts, anywhere like that where the information might be essential in establishing things like projected sales and output, costs of sales, cost figures, figures for overheads, etc. So if we find out if all these documents have been prepared or completed, or if not, we can look at them and try and find out how we're going to get the information and see if anything needs updating and what we can use. Once we've got the figures for the income and the expenditure, we can work out how much money we're potentially going to make from the project or with this budget, and then we can look at the costs and work out ways to reduce them. We can see if we are likely to have any cash flow problems, and we'll get that information early so that we can give ourselves time to do something about it and plan for contingency, which we'll talk about in a minute. Additional sources of information we may be able to use to do comparisons perhaps from past budgets or years so that we can do our forecasts as we discussed in session 1. Examples of internal sources might be, as are on the screen now, say from senior management, we might get changes to the plans, visions. Other management might have declared commitments in different areas. From accounts, we might be able to get the previous performance data of periods. From the marketing department, they might tell us how the marketing effort is going to change or how past ones have worked. And the production team might be able to tell us if anything's changed in the production process or what their budget's like. And then from administration, we might be able to get some idea of the processes that are going to be involved and details of any expenses or budget that we'll need to require for the administration side. Examples of external sources might be commercially available customer research, statistics on economic performance, direct observations of competitors, conversations with suppliers of goods or services to the business, or local chamber of commerce, for example. So once we've gathered all this information and we've analysed it and we've put together our budget, it's planned, it's drafted, we might need to consider getting it checked. We want to check it before we finalise it and start looking for agreement, because as we talked about before, accuracy is a key factor in making sure people are sort of buying into our budget, and we want to be sure that because we've been just focused on it that we haven't missed other things. Using colleagues or other members of the team can be useful, getting them to give it a second read, comparing it against previous budgets and how people had gone about theirs, and then doing reverse calculations on our mathematics and going back, starting from the end, working backwards, because if the budget is unrealistic, it's going to create us problems and cause things further down the line. And there's a number of issues that unrealistic budgets can cause. And those consequences could include things such as demotivation. Unrealistic budgets and targets, as we talked about before, can be very demotivating. The budgetary slack that occurs if the targets are set too low could mean that there's money tied up there that could have been allocated elsewhere. Incomplete projects because there are insufficient funds and resources, and additional funding being needed, so you might have to take loans to fill gaps, and that adds extra interest. There could be extra costs that could mean that the profit is a lower profit margin, or that the cost of the product is larger than the actual cost of the service or product that it brings in. It may lead to repricing, which has an impact on marketing and sales because they may have to redo their market research, and that's an extra cost, which could lead to competition's prices being way better than yours, or they're at the market earlier because they've had no issues or rebudgeting issues. And that could lead to losing a market share, and that means more expensive advertising and marketing campaign to try and take that back. And all these things could ultimately lead to the organisation failing and bankruptcy or debt. Another aspect we need to be considering is setting contingency for a budget. Now, contingency planning in budgets allows organisations to respond in a sort of structured way to any risk or unplanned event, and is generally undertaken at the same time as that annual budgeting process. In a simplistic situation, budgeting for contingencies in effect is really creating three budgets: a best case scenario budget, a worst case scenario budget, and an expected case scenario. So it isn't always that straightforward, and there are many requirements for contingency in different areas and in different ways, and there are methods that have been developed to quantify the uncertainty and measure the contingency that needs to be put in reserve as a cost estimate. Different methods have been developed, and there's different calculation for costing contingency, and there's a range from simply applying a predetermined percentage of a total budget or a total cost of a project, which your organisation may have set, and we'll talk about that in a second, to complex mathematical and statistical methods. So we're not going to go through all the methods available, but they can be grouped into two main types or categories really, and that is deterministic methods or probabilistic methods. Deterministic are, briefly as we've already mentioned, they're usually a percentage of the cost estimation of the budget or the project, commonly set by the sector or the organisation or by a group of experts based on their experience and their competency in risk management or risk analysis, and it determines a percentage of the contingency for the project. Probabilistic are based according to, and these are a bit more complex, the desired level of confidence that the owner of the project or the company wants to have in that project, so it could be varied. The probabilistic assessment methods require a lot more time and budget to conduct them. They're a bit more complicated and therefore normally used on larger or more complex projects. And they require some sort of calculation for those costs, and there are a number out there such as probability trees, parametric modelling, expected monetary value, range estimating, and these are all more detailed and complex, and if you're going to be using them within your organisation or within your project, then you'll have to research those further. Most of these are based on risk analysis, as we looked at in Project Management 508, but also there's a need to assess the likelihood of the potential unexpected costs, and we need development plans and guidance on the need of how to use that contingency fund or resource, and many organisations state different ways or terms for their budget contingency. So a number of terms there on the screen, and we'll just briefly go through them. So the first one there, standard amount. This is just the simplest and easiest, and probably the most common. It's just a standard amount such as 10% of the budget as common contingency in some sectors or organisations. By definition, the costs of contingency are unknown, and therefore a lot of organisations see no point in putting a lot of time and effort into estimating them with complex methods and algorithms, so they just say, we'll go with a standard method. So it's a deterministic guide. They're just going with a standard percentage. The next on there is risk management, another common one, and this is, like we said in Project Management 508, it's about identifying the risks, quantifying their impact and their probability, and as long as that is done reasonably accurately, then it can be a good way of doing it, and as long as we can justify the contingency costs linked to that risk analysis. management comfort, inclusion of an amount that is quantified by the management that makes them feel relaxed. So here we're talking about that probabilistic method. Generally speaking, it's a difficult one to agree because a comfort level can be a matter of opinion between people, so it can be quite difficult to agree that comfort level. The next on there is reference class forecasting, usually using project built budgets, where you compare a similar project in the sector or industry and the amount that they've been going over budget. If those have been, for example, regularly going 40% over budget, then a standard amount, as the first method there, of 10% would be far too small. So it might be a case of agreeing something based on the reference or the class of the project you're doing. And then finally, contingency parameters, normally a standard calculation for an industry or organization based on some parameters that have been reasonably approximated and agreed across the industry. They build in expected errors and risks, so they're usually based on previous projects and budgets. So it could be, I don't know, for a high-rise block of flats that has a certain type of construction or something, there might be an agreement within the building or construction industry that would require this amount of contingency. Another thing that is key to getting our budget agreed is securing the support of stakeholders. It's important that we're fully aware of the interests of various internal and external stakeholders. Remember, as we discussed in Building Relationships Unit 506, we can do stakeholder analysis, and we also talked about the importance of it in Project Management Unit 508. And again, different and varying situations will make the stakeholders different. It could be a new department that you're setting up a budget for. It could be annual budget review. It could be a new project, and different sectors, the public and private sector, sales and production, manufacturing or services, and just your own organisation's perspective is going to make a difference. Remember, different stakeholder groups have different priorities and expectations of your budget. For example, accounts will just be looking at the figures. Production staff may well be looking at the cost and the resources, or looking at just the work or the quality perspective. And any partners might have their own interest in just protecting themselves. You need to be aware of those different sorts of factors, because you're going to be needing to get the individual support for your budget, and you'll need to be aware of what their thoughts are. As we've already seen in stakeholder analysis and building relationships, stakeholders will have different varying power, influence or interest levels, and we can use those to sort of think about how they may be thinking about the budget. There are some key factors we can be considering when we're trying to gain stakeholder support, and the first is power. If a stakeholder has clear power, then in the relationship or in the budget, then we need to take out, it could be a sole supplier or key supplier, for instance, or someone who's got a compliance power, or somebody who's got the sign off, they hold the purse strings. We need to ensure they're engaged and they understand what's going on. Then there's influence. If they have influence, they will be taking a strong emphasis on the budget areas that impact on them, and they'll want their input on those areas. And then engagement and levels of interest can be positive or negative with the impact on the budget. I mean, because negative could be that they have no interest in the budget, they do not scrutinise it, or they could start looking for weaknesses and over scrutinizing it. On a positive side, it could mean they're more forgiving and they don't scrutinize it sufficiently, but that can have its negative as well. So we need to engage and promote interest to ensure that we help them understand so that they can keep within the budget, and where possible, get them involved in the budget setting, as we talked about taking ownership. And then finally, on the bottom there that came up, communication. People don't like to be surprised, and not knowing something can be the worst thing for them. They may not get their way, or you may not get your way, but if they've been considered and informed, they're more likely to work with you. So where possible, try and engage and gain a powerful stakeholder's support and their opinions to shape the budget in the early stages, and get their backing, because that will influence others with power. They're more likely to support it if they have had their input sought and they've been engaged, and it could also lead to additional resources from them or the organisation in general if they're seen as a key stakeholder and they're really on board. And by communicating budget plans with stakeholders early and frequently, we can ensure that they are fully on board and that they raise any issues or rebuff things early rather than late on if they're going to put the blockers on things. We don't want to leave it to the last minute when we're at that final drafting stage. So do it early, and then at least we're ahead of the game. We can utilize stakeholder analysis to try and manage our engagement. Where we've got high power, high interest stakeholders, we'll need to make sure they're fully engaged in the budgeting plans. We need to keep them satisfied, or they could totally scupper our plans. Where we've got high power but less interest stakeholders, such as accounts, for example, because they're powerful in the process and the monetary terms, but they're probably not really interested in the project or its outcomes. We need to ensure they are satisfied on the compliance side, but we keep them informed, otherwise they may well become blockers. Where we've got low power, high interested stakeholders, probably more interested in getting the project or the work done, they'll need to be adequately informed so they can input detail about those things and assist in calculations, but unrealistically they're not going to be that interested in the budget factor, and it's more going to be about total quality and the outcome for them. And then where we've got low power, less interested stakeholders, we just need to keep them engaged and communicate, but not excessively, because they're going to get bogged down by it. And it's also about how we communicate and how we manage the process of setting the budget, because it can be a long process between that first draft of the budget and the final adoption, especially if it's something like a new project. Maybe not so much for annual budget review, unless there's been some planned changes or there's been some significant changes to, say, the department. But for a project, for instance, you could use a focus group of stakeholders, sort of plan the budget at the beginning, gather in their thoughts and expertise to see if there's anything missing. There may be multiple revisions needed to ensure that stakeholders have full support, and it's better now than once the project or the budget period has commenced. When it has been finalised as a draft budget, communication then becomes really critical. All stakeholders need some sort of briefing. They need the opportunity to comment. So any final tweaks, I want to call them tweaks because hopefully there's nothing more, to ensure their support are incorporated and the stakeholders feel that their interests are reflected in the final budget. Otherwise they're not going to buy into it, and if they don't buy into it, it's going to be very hard to keep to it. So we're coming to the end of session 2 now, and before that, just a quick recap, and then we'll do an activity just to finalise things. But our aim was to know how to set a budget, and it said that by the end of the session we'd better explain the process of setting a budget, and we've talked about the generalistic version of that, and you've done an activity to look at your organisation, so hopefully that's been explained in that activity. Said we would identify the information needed to set a realistic budget, and we identified what makes a realistic budget and how we got to ensure it is. And then we talked about explaining how to set contingency within a budget, and we looked at contingency, and then we've just looked at the factors to be taken into account when you want to secure the support of stakeholders, and we've just talked about how you could use stakeholder analysis and the process you would go through. So I think we've covered those areas, so let's have a look at the activity. So for this activity, you may need to go away and do a bit more research to build on what we've talked about, but you need to identify the information required to set a realistic budget. I think we've been through that. And then explain the process for setting contingencies within that budget. Now, do that using a setting or a situation, a detailed context. So maybe something within your organisation or how you've been through the process. What information is used, and explain why that information is required and how it is used in the process of contingency, where it fits in. And then part 2, analyse and draw conclusions as to the essential features of 2 factors to be considered when trying to secure the support of budget holders, stakeholders. So any questions on that, check with your assessor, but there's a worksheet there for you to download, and make sure you concentrate on the verbs in there. So where it says analyse, make sure you're analysing things. Okay, and I'll see you for session 3 once that's uploaded.